There are lots of different types of regulations when it comes to investments. On Relli Academy today, we're going to take you all the way from the non-regulated to the public securities that you're used to on the stock market. There's a wide spectrum of different types of investments, and different people will qualify for different investments. The higher you go on the risk spectrum, the less people qualify. When you look at non-regulated syndications and joint ventures, you're looking at deals that are happening behind closed doors that are not advertised. People shaking hands and making deals. You want to be real careful with these types of deals because there's no real systems in place to keep that person in check. One step underneath that would be what we call a Regulation D offering, which is an exemption from securities law. Depending on which one you choose, the sponsor will be able to either advertise their deal to the public and only allow accredited investors, which are high net worth individuals with over 200,000 in income individually, 300 with a spouse, or $1 million in assets outside of their residence. Or with B, 506B, they'll be able to bring in 35 non-accredited retail investors, but they cannot generally solicit the offering. So these two different types of offerings are what we call exemptions from securities law that give real estate operators the ability to go out and find new investors. As we dig into the bottom side of the table here, you're going to start to see stuff that's a little bit more regulated. So for example, in our crowdfunding syndications like Regulation CF and Regulation A, they are also exemptions from securities law, but they allow for average consumers to invest based off of a certain amount of due diligence that the operator does through a broker-dealer. So there's more systems in place here such that an average Joe can invest their capital. So if you see a Regulation CF or a Regulation A offering, that means that you as an average consumer can invest $100, $1,000, $10,000 at a time into these types of deals, and there will be a broker-dealer or a certified operator in between managing the transactions to protect both parties. Still an exemption, but a little bit more secure, a little bit more reporting than what you're going to see in a Reg D. The last component is a public security. Those you can see 40 Act investments or S1 securities like Apple, Google, Nvidia, or choose your favorite stock. Down here in the public security section, this is where all of the scrutiny comes from the SEC. So what you'll notice is that these guys have a much higher requirement for reporting and auditing. So lower risk spectrum on these more secured offerings that are gone through from the SEC, and higher risk profile for those that are non-regulated.